Welcome back, Focus learners. I am absolutely thrilled to have you here for another explainer. Today, we're unpacking what is heavily anticipated to be literally the most significant market event of the entire decade, the potential IPO of SpaceX. Look, this isn't just about rockets launching into the sky, right? It's a massive, multi-layered financial puzzle that most people honestly aren't even looking at. We've pulled together prospectus data, investment analysis from Alta Exchange, and some deep market commentary to bring you the full picture. So get ready, because how you view this company is about to completely change.
Okay, let's dive into this. We all have a very specific image in our heads when we hear the name SpaceX. But what if I told you the public perception of this company is entirely backward? Like, what if the giant rockets, the sci-fi spacesuits, the whole Mars colonization plan, what if all of that is actually just a brilliant, highly visible delivery mechanism for a completely different kind of business? Think about it as a literal Trojan horse, designed to deploy an invisible money-printing monopoly right over our heads.
1.75 trillion. Let that sink in for a second. That is the staggering top-end valuation floating around for the anticipated 2026 or 2027 SpaceX IPO window. To put that massive number into perspective, this would immediately launch them into the upper echelon of the most valuable listed companies on the entire planet. But the critical question for us is, how in the world does a company that blows up experimental rockets justify a valuation that rivals the GDP of entire countries?
Section 1. The trillion-dollar hype. Well, to answer that, we first need to set the stage by acknowledging what everyone thinks they know. The dominant narrative out there is that SpaceX is just a company building reusable rockets with this ultimate sci-fi goal of colonizing Mars. And hey, to be fair, they are incredibly good at that. It's captured the imagination of the whole world. And there's a lot of money in that vision. The global space industry is projected to reach a massive $1 trillion by the year 2040. So by systematically capturing market share in this booming, totally uncrowded sector, SpaceX has actually grown its private valuation by over 200 times in just the last decade, hitting around $400 billion recently. But here's the catch. Capturing market share in space launches alone doesn't actually guarantee massive sustainable profits. Which brings us to the first major reveal beneath the surface. Section 2, the Starlink secret, the true profit engine. You see, the highly publicized rocket division, the part that gets all the YouTube views and the flashy news headlines, is actually completely eclipsed by a much quieter, far more lucrative part of the business. According to financial data revealed in recent IPO prospectus filings, their satellite internet unit, Starlink, is absolutely devouring the rest of the company's revenue share. Last year alone, Starlink generated $11.39 billion. That is 61% of SpaceX's total sales, and it's accelerating fast. By the first quarter of this year, Starlink skyrocketed to make up a massive 69% of all company revenue. So the rockets are really just the delivery truck. Starlink is the cargo. Now, what's really interesting about this slide is the stark reality of their profitability. Look at this. Starlink brought in $4.42 billion in net income last year. Meanwhile, the core rocket launching unit, it recorded a net loss of $657 million. Starlink was literally the sole profitable division within the entire SpaceX empire last year. It is the undisputed financial engine keeping the lights on and funding all that space exploration.
So who's actually paying for all of this?
Well, Starlink is incredibly versatile. It started out by capturing these high-margin rural households, growing to over 10.3 million active subscribers by Q1. But they didn't stop there. They quickly expanded into really lucrative commercial contracts, providing high-speed Wi-Fi for massive maritime shipping fleets like Maersk and even commercial airlines. Beyond that, it's become a critical tool for governments and humanitarian efforts. It was actively deployed during the Hawaii wildfires, used to set up field hospitals in Gaza, and implemented to maintain connectivity during protests in Iran. It is a truly global, multi-segment monopoly. Section 3, Launch and Link Synergy. So how exactly did they build this undisputed low Earth orbit monopoly? Let's take a look at the internal flywheel they've built to make this possible, because you definitely don't get 6,000 plus satellites into orbit without a massive logistical advantage. I want to walk you through this brilliant synergy step by step because it is
fascinating. Step 1. SpaceX invests heavily in building reusable rockets entirely in-house. Step 2. By reusing those rockets, they spread out production costs, allowing them to drastically increase their commercial launch frequency. Step 3. They use that unmatched launch cadence, we're talking sometimes launching every 3 days, to rapidly deploy their own Starlink satellites. They've got over 10,200 of them in low Earth orbit now. And step 4, the massive profit margins generated by this satellite network directly fund Elon Musk's long-term vision for Mars. The cost-heavy launch division perfectly enables Starlink's high-margin cash generation. It's just a beautiful closed loop of continuous value creation. Section 4, welcome to the Muskonomy. We are shifting into high gear here, looking at the deepest, most mind-bending layer of the iceberg, the interconnected web across Elon Musk's entire empire. Because, guys, this isn't just about SpaceX functioning well internally anymore.
And this brilliantly illustrates exactly how that broader ecosystem works. We are seeing a real-time integration of Musk's artificial intelligence company, xAI, directly into the Starlink network. Grok is already automating Tier 1 customer support, which has cut response times by 30%. But it goes deeper. xAI models are actively managing satellite latency, they're predicting network congestion, and seamlessly rerouting traffic. The AI is even optimizing satellite positioning to save fuel, and it's using anomaly detection to block cyber attacks and jamming attempts. They are literally building an autonomous, self-healing space infrastructure.
Which brings us to a massively under-the-radar development, the star cloud concept. Musk actually intends to build orbital data centers in space for AI computation. The goal? To compete directly with Earthbound giants like Google and OpenAI. And, as noted by market analysts, Musk has explicitly linked Tesla's semiconductor fabrication capabilities as essential for scaling the AI chips required for this massive initiative. Let's connect to the final dots for a second, because this is where the cross-company synergy becomes a total financial explosion. Tesla is pushing hard into building its own chips, known as Terafab. Now, if SpaceX pulls off this massive IPO and secures billions in cash, they're going to need an unimaginable amount of processing power for these space-based data centers. If SpaceX buys those chips directly from Tesla, it creates an entirely new, immediate, multi-billion-dollar revenue stream for Tesla overnight. So investing in SpaceX might actually be the biggest catalyst for Tesla's future valuation. Section 5, Path to the IPO. Okay, I know it's easy to get lost in the science fiction of orbital data centers, so let's ground these wild future projections back into reality by looking at their unparalleled track record of execution. Let's move to and see how this builds over time. The operational momentum is just undeniable. I mean, from the very first Falcon 1 reaching orbit back in 2008 to that incredible engineering feat of literally catching the Starship booster out of the air with mechanical chopsticks in late 2024, now they're projecting $15.5 billion in revenue for 2025. Hitting these operational and financial milestones makes that target 2026 or 2027 IPO window highly realistic. They are consistently proving they can scale. And the underlying financials absolutely support this momentum. SpaceX is already EBITDA positive, but more importantly, their valuation multiples are compressing. Their EBITDA multiple actually dropped from 247x in 2021 down to an estimated 51x in 2024. So what does that actually mean for you? Well, it means the valuation growth is being underpinned by strong, improving operational performance and declining unit costs. It's not just empty hype. So, as we wrap up this explainer, I want to leave you with a provocative question to reconsider everything we just covered today. When this historic IPO finally hits the market, are you really investing in a rocket company that just wants to go to Mars? Or are you buying into the ultimate self-sustaining AI, data, and internet monopoly that just so happens to own the only reliable delivery trucks to space? The answer to that might completely redefine how you look at the future of the market. Thanks for learning with me today, and I'll catch you in the next explainer.